I'm Tony Kay, I'm the editor of Eureka Report. Welcome to Property Point. And I'm joined again today by Nerida Conisbee, Chief Economist of the REA Group. Welcome again, Nerida. Thanks for coming in.
Thanks for having me.
So last week the REA Group launched the first Property Demand Index, which had some really interesting findings in there, and I just wanted to have a chat to you today about what was in that index and what it's really telling us about the marketplace.
Sure. So maybe if I start by explaining how we developed the index. So what we did, we had a look at the number of people viewing our buy site, so people who are actively looking to buy properties, and compared that to the number of listings. So it's a pretty pure measure of demand and supply. What we saw over the past 12 months was a really big jump in the index, so a 17% jump in the index. It was driven partly by a large number of people searching on the site, but contrasting that, and this was the bigger factor, we have seen a pretty big drop off in listings over the past 12 months, so far less supply of property available.
Okay. Now, I saw obviously that Sydney and Melbourne are key drivers in the market at the moment, but there's different dynamics at play obviously in terms of housing versus apartments. So, and there was also some interesting things in terms of Tasmania having quite strong demands in apartments as well. Yeah, so maybe we could talk a little bit more about those.
Yeah, sure. So we did see significant variation across the state. So Sydney and Melbourne, both increasing really high, both now at their highest levels of demand that we've recorded. So we've been tracking the index since about 2013, and they are at their highest levels in those two cities, in those two markets. So Sydney, very high demand for apartments, very high demand for houses. In Melbourne, not so high demand for apartments, was probably at about the Australian average, but very high demand for houses. Tasmania was really interesting though. So there does seem to be this national drive for affordability, and Tasmania is one of the few places in Australia where someone on an average income can actually still afford to buy a house on their own. And we saw this big uptick in Tasmania, not just for houses, but also for apartments. So it's quite a small market when you can compare it to Sydney and Melbourne, but the fact that it increased so much was significant.
And what's happening up in Queensland?
Queensland's sitting about on the average. So Queensland is interesting. So Brisbane, we do have a lot of issues with oversupply, particularly for apartments. Houses continuing to see strong demand. But then you've got regional areas such as Gold Coast and also Sunshine Coast where we don't really have those same levels of oversupply of apartments. So on average, it was sitting around the Australian average.
Yeah, and I guess no surprises with what's going on in WA, but again, I think your report underscored what's happening there in terms of the slower conditions.
Yeah, so really tough in WA. So we saw a bit of a pickup in April in the index, but since then demand has continued to decline. So, WA is sitting below where it was in 2013, and at the moment we're still seeing price declines, and this result certainly suggests that those declines are still going to occur. So again, there's a lot of variation when you look across Perth. Some of the inner suburbs are starting to see price growth, but overall, very low demand conditions continue.
Yeah. Now you also had a list of the top suburbs in your report as well, and there was quite a few in Victoria.
Yeah, so Houses Victoria featured very prominently. So we did see Norwood from South Australia in Adelaide, and we also saw Paddington in Sydney. But the rest of them were primarily Melbourne suburbs. So Warrandyte came in at number one, which was quite unusual because Warrandyte's, it's outer urban.
Yeah.
It's very leafy and very different to the rest of the suburbs that were in there. So as we moved down the list, it did tend to be places that were sort of inner areas, places like Ascot Vale, places like Richmond featured in the list. So very much house dominated very much Victorian dominated for houses. Apartments was very different. So apartments, we did see primarily Sydney suburbs featuring. So number one was Manly. Manly is popular not just with local buyers, but we do see a lot of buyers looking from offshore, particularly UK, looking at Manly. So Manly featured number one, Elizabeth Bay number two. So very much a Sydney-dominated list for the suburb on a suburb basis.
And they're obviously premium suburbs, in Sydney. in terms of the Victorian market, probably a bit more wider spread.
Yes, it is very characteristic of Sydney at the moment. So Sydney, when we even have a look at the suburbs that are really shooting up the list in terms of popularity, they do tend to be those premium suburbs that feature prominently. Melbourne's a bit different. We're still seeing a lot of people look for affordability, but Sydney, the economy's doing well, white collar employment's doing well, and that's really flowing through to the types of suburbs people are looking at.
Yeah, we've been reading a lot, and I mean a lot, about what's happening in the apartment market. That's I guess the burning topic in the Australian property sector. So obviously your index is showing that certain areas are under pressure, which has been widely discussed. And do you just see those conditions continuing?
Well, it is interesting. I mean, when we had a look at apartment demand of the index for Melbourne, apartments were sitting at the Australian average. So certainly that level of supply that's been put in that market has really satisfied demand. In Sydney, not the case. Brisbane, again, a lot of supply. So I think when you're looking at apartments, it is a geographically isolated issue in that there's places like Melbourne CBD, some of the fringe suburbs. It's Brisbane CBD. If we have a look at Sydney, I don't think, we're not really seeing any pressure as too much supply entering the market. So Melbourne, Sydney were the issues. It's interesting though when we have a look on our site and we have a look at the apartment developments that are getting the most views, and we do still see a lot of people looking at Melbourne and Brisbane apartments. So whether it does seem to be translating to buying. I think the main problem with the level of apartment development, there's three issues. There's a settlement risk issue, there's, who's going to live in them, and then there's a secondary market issue. So I think right now, prices, are kind of stable, but when people are settling, prices are coming on for underneath from where they originally signed the contract. So that's starting to cause a few problems. So there's starting to be a few issues emerging, but still we are seeing still quite strong demand in those markets.
The settlement risk issue has been discussed a lot as well, and that's obviously a concern. Is that something that's on your radar screen in terms of the apartment market?
Yeah, I mean, we couldn't really track settlement risk, but certainly when we have a look at the CoreLogic data on the number of apartments that are now less, from when the contract was signed to when the apartment was completed, the value had actually declined, it's quite high in Melbourne and Brisbane. So I think around 15% of apartments in those two CBDs are at that level. Sydney's not seeing that issue at all. So prices seem to be holding in those two markets. And it's not surprising. I mean, you look at the amount of development taking place. I mean, you would expect to see some pressure on prices. But obviously, if you're a buyer, it is quite disappointing, and it can be quite challenging to go to a bank and ask for more money than perhaps the apartment is now worth. And so that's where we're starting to see a few issues arising in those markets.
Yeah, and there's obviously a flow-on effect with the settlement risk as well, right down to the development level.
That's right, yeah. And so it hasn't got to that level yet, but I think everyone is watching it very closely to see how bad it will get and how challenging it will get. It may ride through, it might be fine, but it certainly is causing a lot of concern at the moment.
I think last time we talked about offshore interest in the Australian market. Is that still strong?
Look, it is still strong. We've seen overall about a 7% drop off nationally in the amount of Chinese viewing the site. So the rate of decline has slowed a little bit. Melbourne remains the number one destination for Chinese property seekers. So double the number two Sydney, but Melbourne we see double the number of viewers having a look on the site for Melbourne. So Sydney, Melbourne have dropped. Adelaide's dropped. Interestingly, though, we have seen a pickup in Brisbane. So Brisbane, whether that's because some of the developers have been far more active on the site trying to push their developments, or it could be affordability as well. So we do know that a lot of Chinese buyers are looking for affordable options. They're not just looking at Brisbane apartments, they're also looking at Perth House and Land. So they're two areas where we are seeing, a lot of affordability, a lot of affordable options available, and a lot of interest from Chinese as a result.
Yeah, there's certainly no shortage of demand in that area, as we've seen over time.
Yeah, definitely.
Nerida, thanks again for having a chat to us. It's always great to have you on Property Point.
Thanks for having me.
I'm Tony Kay. I'm the editor of Eureka Report, and join us again next time.